human elements affect the negotiation. Do you sell your entity or do you sell the assets? It's almost always the assets. And that's a non-tax and tax issue. The non-tax reason that assets are almost always what sells is because the buyer doesn't want your liability. Most lawyers worth a damn will tell their client, the buyer, you wish to buy the assets because no liability comes with the assets. If you buy the entity, you are buying all the things that occurred in the entity that you don't necessarily know occurred. You are buying the liability of the entity. That's the first reason. Second reason is taxes. With the advent of bonus depreciation in particular, but even back under the Section 179 depreciation, when I buy assets, two things occur. The assets are stepped up to what I paid for them. So I pay $1 million for a company. What are the assets? Let's say there's $1 million company. The assets basis is 100 grand. I buy the company. What basis do I get? 100 grand in the assets. What does that mean? I missed out on 900 grand of potential depreciation, possibly depreciation I would have gotten immediately. So when you buy the company, you're not just buying the liabilities, you're buying the old, worn out, used basis of the assets, which tax-wise is generally not favorable. When you buy the assets, you're buying new, shiny things. I paid $1 million for the assets. What's my basis in the assets when I buy the assets? $1 million. What can I depreciate? Well, it depends on the asset. Now, that's where the negotiating comes into play. If it's tangible personal property with 15 years or less life, roughly speaking, then I should be able to bonus depreciate it. I get a write-off all at once. That's a big deal. That is a deal changer.